Accounting for inventories. And in this module, we will be learning about net realizable value for finished goods inventory, for work in process inventory, and for raw material inventory. We will learn all this thing through practice question, so your attentions would be required, along with definitely the calculator, notepad, and writing devices. Please be attentive. There is a practice question for NRV of finished goods and work in process. The company is Bataka that has stock of finished goods. That finished goods are the shoes on December 31st, 2009. Okay, well. And its cost is 15,000. The company also has a work in process inventory. The estimated cost to complete this work in process is 5,000. Okay, on which cost of 10,000 has already been spent till December 31st, 2009. Okay, so these are important information with you. Cost of the finished goods inventory and cost of the work in process inventory with you, and this is the cost that is still to be spent for completing that work in process inventory. The company pays 2% commission on sales to its distributors. This is the cost to make such sale. Estimated selling price of finished goods and work in process, when this will be converted to finished goods, obviously this is what we have already discussed, is 35,000. For the complete inventory of finished goods and work in process is 35,000. Okay. So let's see how it will be worked out. It is the estimated selling price 35,000 as given here. Okay. And what to do? We have to less estimated cost of completion 5,000 given over here. Okay. And estimated cost necessary to make such sales is 2%. Yes, it is given over here. So 2% of the sales price, which is 35,000. So 2% of the sales price, 35,000, is 700. Okay. So this 5,700 will be subtracted from the estimated selling price. This is its net realizable value, 29,300. Well, we have to match this net realizable value with the cost of inventory. All right. What is the cost of inventory? It is given here that the cost of inventory is 15,000 for finished goods and for work in process 10,000. So simply take this over here, finished goods and work in process. So the total cost of inventory is 25,000. So what's your decision? Either net realizable value should be shown in the balance sheet for this inventory, or 25,000 the cost should, yes, whichever is lower of these two. Cost is lower, so the cost of inventory will be 25,000 appearing in the balance sheet. Next is a practice question for calculation of NRV, net realizable value, of raw material inventory. And here in this question, we have Cotton Expert Company, which is engaged in manufacturing of cloth. Price of cotton acquired by Cotton Expert Company has fallen from 200 per pound to 180 per pound. Okay, this is the price for the cotton, means the raw material. Okay. At the end of the month, company had 3,000 units which it had purchased for 200 per unit. It was its cost of buying these 3,000 units of inventory. The cloth made from this cotton, this is something very important. Please put your all concentration over here. First thing is, we have 3,000 units in inventory which were purchased for 200, and now the cost of inventory has been fallen down from 200 to 180. If we want to buy inventory today, it will be purchased for 180 per unit or per pound. The cloth made from this cotton is sold for 500 per meter, whereas the cost of producing 1 meter cloth is 400. What does it show? Although the price of the raw material has fallen down, but still the finished product that we produce with the help of this raw material, cotton, is still sold at a price which is greater than its cost. So we are realizing all what we had spent for production of this cloth. Our spending is 400 and this 200 is part of our total spending, and we are realizing all together when we are selling it for 500. So the thing is, we have to calculate value of inventory of raw material in this case. So put your all attentions here and see that as the finished goods can be sold at a price which is greater than its cost, the cost of producing that finished goods was 400, whereas we can sell that for 500. So in this scenario, the inventory will be measured at its cost, although this cost of 200 is greater than its net realizable value. Here remember one little thing, that for raw material, the net realizable value is its replacement cost. And what was its replacement cost, by the way? 180 was its replacement cost. Just have a look on it. That 200 was its historical cost, and its replacement cost means the cost at which this inventory can be purchased is 180. So when our finished product, in which its raw material which has lost its replacement cost, or which has lost, or the replacement cost of which is lesser than its historical cost, you can say like this, or in other words you can say the net realizable value of that raw material is lesser than its cost. Okay, so there is no confusion, because when this cost of raw material can be recovered in full through the selling price of the finished product, in this case the cost of raw material will not be reduced, that will be taken at cost 200. So you can see that this inventory will be measured at 200 per pound, and there is an inventory of 3000 with us. So the total 600,000 will be the value of inventory that will be shown in the balance sheet for this raw material. Let's see one more practice question on this, where Prince Limited is engaged in a manufacturing business. 1 unit of raw material is converted into 1 unit of finished goods. Okay, the cost of raw material acquired by the company is 300 per unit, whereas on 31st January, due to excess supply, price has fallen from 300 to 200. So our replacement cost is now 200, which is the NRV or net realizable value for the inventory per unit. The cost of producing 1 unit of finished goods is 500, while NRV of the product is 400 per unit. Here the net realizable value or the net selling price of this finished product has fallen. Its cost is 500, but we cannot recover it in full. We will be able to recover to the extent of 400. So when the net realizable value of the finished goods is lesser than the cost of that finished goods, in that case, what to do? We will measure our raw material at its net realizable value, because we cannot recover all of the cost, since our cost of finished product is 500 and we are not able to recover that cost. This 300 was part of 500 that could not be recovered in full. Therefore, this raw material will be measured at 200. Okay, so our inventory in this case was 75 units. Just have a look on it, that the company had 75 units of raw material at the month end. Since it was 75 units and the net realizable value for this raw material is 200, the replacement cost of this raw material. So the inventory will be measured at 200 multiplied by the 75 units, total comes to 15,000. So this 15,000 will be the value of inventory in our balance sheet for raw material. Okay. Well, the important tips to remember are that we have already emphasized that if NRV of finished goods is lesser than its cost, then its raw material shall be measured at lower of its cost and replacement cost. This replacement is the net realizable value, in fact. And where the NRV of finished goods is greater than its cost, then its the raw material which was used for producing that finished goods shall be measured at cost. Okay, so this was all about this measurement of inventory, either finished goods inventory or work in process inventory or raw material inventory at lower of cost or NRV. Thank you.